Hi guys, welcome back to TipRanks. My name is Annika and here at TipRanks we love to hear what different stocks you're looking at and your opinions on the market sentiment. Today we're going to take a look at PayPal. Experts are saying that it's still not cheap enough given the risks ahead. Long-term investors are probably looking at the current state of the market with mixed emotions. In the past 6 months, some of the most dominant companies have been struggling with the broader market tech sell-off. This tech sell-off has been caused by high inflation, rising interest rates, geopolitical tensions between Russia and Ukraine, and as a result, we've seen some shrunken portfolios. One of the companies caught up in this tech sell-off is PayPal, where it's seen its price fall around 70% from its peak from last summer. PayPal has faced some growing pains in regards to the challenges related to the end of its partnership with eBay. But nevertheless, analysts are still bullish on its long-term prospects. It's ironic because PayPal has got its name as one of the leading pioneers in the space, so it's been considered one of the safer plays. These days, everyone's been wanting to get in on the action from the buy now, pay later firms. They've been popping up left, right, and center. Many big tech firms also want a slice of the profits that we've seen in digital transactions. This emergence of digital transactions has gone hand in hand with the rise of the crypto market as well. And PayPal has been one of the advocates of cryptocurrencies by allowing the use of cryptocurrencies on their platform. You can even link your Coinbase and withdraw into your PayPal accounts. The issue is that there has been a rise of online e-commerce competitors that have been trying to penetrate the digital payment space. Companies like Braintree, Click to Pay, Amazon Pay, Apple Pay, Google Pay, Payoneer, and many more have been causing tough competition for PayPal. Although PayPal has enjoyed solid margins for so long, it really needs a commerce focus to withstand the pressures from rising competitors that are entering the fintech universe. PayPal acquired Honey for $4 billion at the beginning of 2020. This acquisition was quite an interesting one because it came at a time of frothy valuations, and how it fit into PayPal's strategy was kind of a mystery to many. Now, with all these competitors, how can PayPal stand out? They could go down the route of being a neobank, or they could double down on digital payments with a social media platform. But as we've seen, it's a challenging process to acquire a social media firm. The Pinterest deal fell through, and it's not likely that PayPal can create its own social media platform. It's unclear whether PayPal is able to regain itself after the jolt it got after the eBay partnership fell through. But I think if PayPal was to go down the social media route, then they ideally should acquire a social commerce platform. The current price for PayPal holdings is $80.20. The analyst rating consensus is a strong buy based on 27 buy ratings and 5 a hold and 1 a sell. The analyst price target is $129.13, which is a 60.95% upside from where we're at, based on 33 Wall Street analysts offering 12-month price targets. PayPal actually released weaker than expected guidance for 2022, and this added to the negative sentiment. However, this pessimism was erased when PayPal released its Q1 2022 results on April 27th. Many investors were expecting the worst, but the company reported a top line of $6.5 billion and a bottom line of 88 cents per share. This was largely in line with Wall Street expectations. Total payment volume for the quarter also increased 13% year over year, up to $323 billion. Growth is supposed to unwind in 2022, but this is mainly because of eBay's transition to its own payment platform. Management are forecasting this shift to take place up to $600 million of pressure on the revenue this year. Even though the company is doing financially well, analysts are projecting sales to be $28.6 billion for 2022. PayPal also has a sturdy balance sheet to withstand these hurdles coming up. They have $4.6 billion in cash and a debt-to-equity ratio of 50%. So PayPal still has considerable financial flexibility to fund business operations and future business operation plans going forward. Taking a look at some of the recent bullish news for PayPal. Aon and PayPal are expanding access to insurance for small businesses. This will enable PayPal's small business customers in the US to explore and obtain their insurance in the same ecosystem they use to manage their payments. PayPal is also supporting the Made legacy. IMG is going to relaunch Made in collaboration with PayPal. And on May 2nd, PayPal Ventures invested in Zeppelin with a $111 million Series B funding round led by Avenir and Kazakh. Zeppelin is a leading business-to-business payments and financial services platform. They serve small and medium-sized businesses in Latin America. This is a great way for PayPal to gain exposure to Latin America and expand their business customer base. Many are saying PayPal is now a value stock. What do you guys think? Leave your thoughts in the comments below. Also remember, this is not financial advice. Make sure you do your own research before you invest in anything. Thank you guys for watching, and I will see you in the next video. Bye!